We are on. All right, welcome to the pre-show, the Tim and Rhoda Show, Finance Agents Live, episode 41.
Live.
You're probably not there yet. So we're just talking, chatting, yep, doing our thing.
Tim was going to say choking.
Choking, that's what I'm going to do today, probably. Before the show starts, we had a birthday 2 days ago?
Monday.
Monday.
9th.
Darren, you want to come into the pre-show?
I'm actually here. I'm on the wrong microphone.
That's why we
There
do
we
the
go.
pre-show.
That's what the pre-show's
There we
for.
are.
We're getting this
That's
stuff out. All right, so Darren, how does it feel to be 50?
I wouldn't know.
All right. Okay.
I could ask somebody who is 50.
Yeah, I
Tim.
think we got. Well, no, not yet. Working on it.
Not yet.
Working on it. Shooting for it. Sooner or
You know,
later.
one thing I've noticed is
I'm 50.
I think I'm bettering my time every time I go around the sun. Like, it always feels like it's taking less time.
You know what? What Darren's alluding to is he makes the cheesiest jokes on Facebook that anybody I've ever known. You did a whole. He was doing a series with one ridiculous joke after another for like they were. I mean,
Oh, yeah.
They were
they were so
chemistry
bad that they were
related.
good. It was kind of like those bad dad jokes that you like.
So the first one I posted was about a year ago now, and it's chemistry jokes.
Nerd.
So you can't trust an atom; they make everything up.
Yep. See, just like that. And each one just hits you. I'm just kidding, but they're funny in a so not funny, but they're funny way, right? It's like
Yeah.
that's so ridiculous. It's actually funny.
Well,
Well, there's something about something about H2O in a bar or something like
so,
that.
a chemist
Bars,
walks
right?
in, or two chemists walk into a bar, and one orders H2O. The other one says, "I'll have H2O too." When they drink, the second chemist dies.
There you go, because H2O2 is of course cyanide. I'm just kidding. What's H2O2?
Sulfuric acid.
Sulfuric acid. That would be fun. Brett Nelson, first in. Welcome to the show. We got a lot of stuff going on with you recently, Brett. We got fix and flips, CRE deals, revenue. Keep up the good work. All right, how we doing? 1 minute till showtime. You can feel the tension.
Jazz hands.
Getting exciting. Uh-oh. And the screen went offline.
Really?
What just happened? Just the...
No, it's just Apple verification.
Okay, never mind. Never mind. We're not actually off. Okay. Last chance. You said you had a bunch of jokes for the pre-show.
That was the joke.
Oh, the joke is that you didn't have jokes. Okay. All right.
The other day I was trying to catch fog up on the hill over here. I missed.
Ah, you missed. See, you got a lot of these.
Oh yeah.
We should publish
Oh,
a
yeah.
book. That way we could send out a book of we can make a little picture book.
That could be fun.
Okay. All right, we're coming up on noon. Are we ready to launch this thing?
H2O2 is
Frank
peroxide.
knows what H2O2 is. Good job, Frank. You remembered your chemistry class. Drum roll. About to start. Feeling the rev up. Hello and welcome back to another episode of Finance Agents Live. This is episode number 41.
41 is the days it rained. The first day of sunshine. Noah's Ark. 40s. When Darren said
What?
is it a Moses joke instead of Jesus, I was ready.
Okay.
40 days
All right.
of rain.
You got me again. It rained 41 days. Okay.
No, it rained 40 days.
It
This
rained
is the
40 and day
first
41. Okay.
41
All right.
days sunshine.
Always something new. You were saving that up a long time. All right, so Tim MC here. I'm here with Rhoda. We are going to be talking about an interesting topic today, very timely considering it is about it's tax season right now. Between March 15th and April 15th is tax season. So if you're sitting there and thinking, it's time to pay taxes, but where the heck am I going to get the money because I got a tax liability I wasn't expecting? Well, that's what this show is about. We're going to be talking about what kind of financing you can use to get to pay off your taxes, or a little bit about are you able to get certain types of financing if you have tax liens or stuff like that. So we're going to be jumping right into this. But before we start, if you're new to the show, make sure to subscribe, like the channel, share it, whatever the heck you want to do. Your likes and subscriptions help us help more people just like you. All right, moving on. Next week, we are finally doing our first show on Fix and Flip. This is something we've been working on for 6 months now. We've had a number of fundings. It's been growing very quickly, and we're starting to have a lot of success. We've got a lot of deals on the pipeline right now. Maybe another 6 or 7 could be funding this month. So a lot of fun stuff to share about that. Besides just talking about Fix and Flip, we will be showing you how to get 100% financing for your Fix and Flips by combining different programs, something that I know Frank, our long-term member office, loves to talk about, and we're going to be talking about that too. All right, so heading back into this program, what are we talking about today, Rhodes?
We are talking about how to get a loan to pay your taxes, or what kind of financing you can get if you have a lien for taxes.
That's right. All right, so jumping into it, if you stay to the end of the show, we've got a special surprise. If you are affected by tax liens, stay to the end. You're going to love it, and it's not me trying to sell you something. There's some cool information at the end of the show you're going to be really excited about if you have tax liens. All right, so let's get rolling on this and see what we got.
First, a disclosure.
Wait, what? Disclosure?
We are not CPAs. We are not tax attorneys. This is not tax advice.
Nope.
So, but I will say, getting a letter from the IRS is like a toothache. You cannot ignore it.
Yep, doesn't just go away.
I tried that. That was my other story.
You tried it? You
I tried it.
Toughing out a toothache?
I tried toughing out a letter from the IRS.
Oh, you toughed out a letter from the IRS. That's stressful.
Because I was in the Peace Corps, and I was like, and all the other volunteers were like, I'm not filing. And I'm like, cool, I'm not filing. And so I didn't file, and then I got a letter.
And then you got a letter.
Why didn't you file? And I just put that in the drawer and put that in the drawer, and then they're like,
Just,
and then I thought, better deal with this.
yeah, that's no good.
Just a PSA. If you ever have anything with the IRS, they will always send you by U.S. Postal Service whatever they need, the information that they need to contact you. If you're receiving a phone call,
Yeah, I get those calls all the time. They're totally trying to get me, right?
be wary.
They just called me yesterday, saying I'm about to get arrested. If you're about to get arrested by the IRS because they called you and they have a strange Indian accent or the voice sounds like a computer, it's probably not them. Good thing you're on the show, though. We can help you out.
We do, and we do have a referral that if you have one of those letters and you don't know what to do, give us a call. We have a partner we can work with to help you get you out of that situation.
That's right. All right, so there's 6 general tax problem scenarios we're going to be sort of referencing today. 4 of those are ones that affect you personally. A couple of them are related to real estate. And so we're going to go over this today as they relate to the different funding programs. But in general, they break into 2 categories. I think I just said what they were. Right?
Yeah, business and real estate tax issues.
Business
Also
and real
personal.
estate. Business that affects personal, real estate, it all affects you anyway. So those 6 general tax scenarios are, first of them, I call it the 1099 surprise. We have like 20,000 agents that we work with. We send them payments. Most of them are 1099, so we're sending it off. And it's up to them to do their tax withholdings and the tax reporting at the end of the year. I've seen a lot of people get that 1099 surprise when they're talking to their CPA or accountant the next year. The CPA says, "Hey, you owe $10,000. Remember that $100,000 in commissions you made last year? Guess what? Now it's time to pay up." So that's the 1099 surprise. That's never fun, but it happens, right? So the 1099 surprise, there's the business tax surprise, where you just didn't do the proper withholdings, or you thought a bunch of your expenses were expensable. Turns out they weren't. Like if you were doing an accelerated payoff of business debt, you may be unpleasantly surprised to know that while you can write up your business interest expense, the business debt payments, that's not necessarily tax deductible. So if you paid off $100,000 in business debt in a year, that might be $100,000 of net profit where now the money's gone and you got to pay taxes on it. So that's no fun. Here's another one, payroll tax liens. What do you do? How do you avoid a payroll tax lien, Rhoda?
You do your payroll withholdings every time you run payroll.
Right.
So,
Use a service. Don't try to do it on your own. You're going to screw it up. If you use ADP, which is one of our partners of ours, they will actually manage the withholdings for you, and if they screw up, they're responsible for the tax liability. We have seen, and Rhoda, because she handles a lot of the term loan stuff, she's seen a lot of people that come in with a tax lien from payroll problems, and you are in trouble. All right.
people just don't know. I don't think it's like them trying to dodge taxes, but you don't know what you don't know. There's a lot.
Yeah. People say, oh, my CPA screwed up. Well, guess what? Your CPA doesn't have insurance like if you did it through ADP. So I strongly recommend using payroll service and don't muck it up on accident. Now, if these things go too long, you end up with tax liens. You could end up with a business tax lien. You could end up with a capital gains tax, which is personal, or property taxes. And for the capital gain tax, there's a lot of different reasons you would get that, but I like to call it the flip sale tax, because a lot of people doing fix and flips, just like the 1099 surprise, they didn't do enough withholdings. Next thing you know, boom, they got to pay taxes on all the money they made from those flip sales, and that can be an unpleasant surprise. Yes. All right, so that's that. We're going to go through all 9 different funding programs quickly. We're going to go all through 9 different funding programs and talk about the scenarios of could you use it to pay off your tax lien, or if you have a tax lien, is it going to be a problem? So let's start with CRE. Rhoda?
Yes.
Guess what?
Yes, you can use it to pay off tax liens.
CRE basically doesn't give a hoot, right? You could have 100 tax liens. As long as the equity in your real estate is enough to pay it off, awesome. Frankly, we see this stuff all the time. People come in. Most other lenders will not help you if you have a tax lien. So as long as the loan can resolve the issues, it is good. It can be a business tax lien, personal tax lien, real estate tax lien. Nobody cares. In CRE, we can fund it. So that's an easy one. Check that one off. What's next? Darren? PTL, personal term loans. All right. So let's say you have a pending tax liability. Let's go through a couple different scenarios. You know, you just did your taxes. You owe 10 grand that you didn't know was coming. You don't have 10 grand in the bank. Shocker. So you want to pay it off, and it's not reporting anywhere. Can you get a personal term loan to pay it off? Rhoda?
Yeah, I think you could.
Definitely.
Definitely.
As long as your income and credit are there, having a tax liability that nobody knows about is not going to be a problem, and it's a great solution. In fact, please do it before it turns into a reporting tax liability. Once it's a reporting tax liability, then it's a problem, right? If it's reporting as unsatisfied, meaning you still owe money, then probably you're not going to be able to get that term loan. If it's reporting as satisfied, meaning you had one and you paid it off, then it should not be a problem, but it is probably going to reduce the amount that you can qualify for the term loans.
Do you know how long it takes for them to report? Is it like April 16th it's going to report, or?
No. The reporting, no. You know what the reality is? It takes a while for liens to show up. So let's say theoretically your taxes are due April 15th and you don't have the money. So you say, I'm going to file an extension. So you file an extension. Now your taxes aren't due until October. And October comes around, you file that tax return that says you owe $10,000. You got a while before they start asking for it, right? They may send letters. It can be another 6 months before they start getting really angry, and then they start threatening tax liens, and it might take a while. So it's a long time between when you owe the money to when it shows up as a lien. So you got a lot of time to fix this. Don't wait. Try to fix it quickly, because you are paying penalties and interest. The interest expense is probably much higher than whatever loan you would get. All right, so another option. Let's say you don't qualify for the personal term loan because you don't have the documentable income. Generally, you can go get credit cards. It could be business or personal credit cards. So let's, again, go through the scenarios. It's not reporting, great. It is not a problem. If it is reporting, it is an issue. If it's reporting as unsatisfied, meaning it hasn't been solved, it's going to be a hindrance unless it's really small, right? If it's below $5,000, then we're probably still able to help you, but it is going to reduce the amount of money that you are able to get. If it's reporting as satisfied, there's almost no impact. From our understanding, the way the banks look at tax liens and medical judgments as similar, in the sense that they're both things that sort of happen to you, sometimes for reasons outside of your control, and so they're more willing to forgive those. Unlike if you default on a credit card, they're going to say, well, you just defaulted on something, you're irresponsible. So they'll give you a little more leeway, and we'll still be able to get funding, although it will reduce the amount of funding you can get.
And satisfy is the same as released? Same.
Yeah,
Is there a difference? Okay.
Yeah, satisfied, released, but it is still on your report. It's going to report for 7 years. So some people may hear released and think that means it's removed from your report. Once it's paid, it still shows up as satisfied and paid. All right, so let's move on to, let's get into business tax stuff with RBA, working capital loans.
This is a good fit, I would say, for people with tax liens because it's really looking at the cash flow of the business. Different lenders have different criteria, but if you are under about 5.5% of your annual gross revenue or lower than 200,000, lenders are definitely willing to work with you. 200,000 would be a max or high end. A good more range is like 75,000 would be more realistic. If it's in a payment plan and you can show that it's in a payment plan, then definitely happy to work with you. There is also a form though for those higher funding amounts for TaxGuard, and they will request from the IRS if you have any liens that are not reporting.
Right, so, if it's, like she's saying, if you have tax liabilities that are coming up, you know how I just talked about, it could be a whole year before a tax lien shows up. A lot of lenders won't know about it, but in the working capital space, they're more advanced, and they have that service called TaxGuard where they literally go right to the IRS and request your information directly, and they know when you have issues. So there's no hiding from them. Fortunately, they kind of don't care. 5.5% is kind of a specific number, right?
Yeah, if it's 5.5 or less, one lender will do that. So it's a good, like you're saying, oh, I make 100,000, but I've got 200,000 in payroll tax.
That's not happening.
That's not happening. But if you've got 100,000 and 5,000 in tax liens, that's okay.
Okay, awesome. Now, Frank mentioned credit restoration, and doing credit repair, credit restoration can help with stuff reporting personally, but in my experience, getting things removed from the business is really hard. You don't have the same laws. There's a very different system. You don't have a lot of recourse for getting something removed from your business. Generally, if it's on the business, it's there, and that's at least my experience is I really don't know how to get it off. Okay, so next, factoring, which is different from working capital loans. How's factoring work for this?
Right, so this is a good alternative for sure because they're looking at the AR of the business, and if it's not reporting, you can do the factoring, but what will happen is they will take your AR and they will pay the IRS for you. So if it's not in a payment plan or it is in a payment plan, they can actually manage those payments for you, and when the factoring company receives your AR, they will disperse funds to the IRS and then to you.
Yeah, just to be clear, AR is accounts receivable, so it's money owed to you by other people. And what you remember, the way factoring works is they give you some money, and then the people that owe you money pay them instead. So that's why they're less concerned with the tax liens, because now they're getting your money even before you do. It's less likely for them to lose it. Right, of course, if the client refuses to go into some sort of a payment plan, well, that's just not somebody they want to work with.
Right, right.
And then the neat thing is they make those payments for you directly, right? Or they
They'll
can,
manage
right?
them for you,
They
right.
can just do it direct and you don't have to worry about it. Even
Right.
easier. Okay, so next let's talk about retirement rollovers. If you have a tax liability, you may be thinking, well, can I use my retirement funds to pay it off? It's mostly no. All right, so there's a few different scenarios. I'm not going to go into too much detail because there's a pretty long list, but in general, if it's a personal tax liability, even if it comes from business expenses, you cannot use the retirement account to use it. It's a prohibited transaction. It's viewed as a personal benefit, so you're going to have to forget that. But if it's a business tax liability that's easily to see that it's for business purposes, then that is something that you can do. So in general, that's how you look at it. If it's a liability on the personal, no. Liability on the business, yes. If it's a real estate liability, you may think, I own this investment real estate, that's business purpose, but if you own the investment real estate personally, no. But if you own it through a business, yes. All right, now SBA and term loans. A lot of different term loan lenders. So how do they look at tax liens or tax liabilities?
They don't really like them. No,
Yeah?
no, they don't, because if you're not paying your taxes, you don't get the benefit of having the government kind of subsidize your loan. I guess subsidize is not really the right word, but anyway, if it's not reporting and you can stay ahead of it, that's great. But if it's in a payment plan, they can work with you and still do it, but your personal financial statement generally has to be stronger. You have to have other assets. If it's not in a payment plan, no. Some lenders that I've worked with have been able to kind of structure it where they will pay your AP, and then you can take that money that
Accounts payable.
Thank you. You can take that money that you were going to use for your accounts payable and pay the tax lien off. That's something that we have worked through a little bit.
Yeah, that's the tax shuffle, right? So if you go to the bank and say, I need this loan so I can pay my taxes, they're going to say, go. they're going to say, get out of here, right? But if you go there and you know that you owe 30 grand for taxes and you're also spending 30 grand a month in other business expenses, you could conceivably get a loan to pay those other business expenses and use the money that you would have paid those expenses with to pay your taxes.
Right.
And so that's what you want to apply for a loan for, your business. Just say, I need money to run my business for a month because I got a bunch of stuff coming up and I think this is going to help. Perfect.
Sometimes they'll look at it, though, if you have multiple tax liens as one of those 5 C's of credit, your character, and you have had a lot of tax liens and now they're all released, that will be detrimental, though.
Right.
So even if they are all paid, you could still not work out for you.
Yeah. One thing regarding what I just said, though, about the tax shuffle, if you will, I want to be very clear. If the bank asks you straight out, do you have tax problems or tax liabilities, and you do not disclose that, there's always the potential it could come back as tax fraud. So I am in no way advocating to mislead the bank.
Nope.
But if you can legitimately use money that you would use for one thing for something else, awesome. All right, equipment finance. Now, you wouldn't go out and get an equipment finance lease to pay your taxes. That would never happen. But you might be trying to get equipment financing, and you might be thinking, oh, I have a tax lien. Is this going to work? So, Rhoda?
It can in some situations, if it's not reporting. Yes, it also depends on the funding amount, really, for this one. If it's under $15,000 of reporting tax liens, you can, but if it's over $15,000, maybe. It has to be in a payment plan, and you have to show payment history. The problem with it is the lien, and they won't be able to put first lien position on the equipment because the IRS already has a lien on your business.
Yeah, they're not going to like it.
Nope.
It's going to make it harder, for sure.
You're probably going to want to take care of it.
Okay, great. And last but not least, and again, a reminder, because next week we're going to be doing a whole show on fix and flip lending and how to get 100% financing on fix and flip. Let's say you're out there doing fix and flips and you have a personal or a business tax lien. Are you still able to do fix and flips with a tax lien? Again, if it's not a lien, if it's not reporting, it really doesn't matter. You are fine. But if you have a personal tax lien, you might be able to do the fix and flip financing. The might is they're going to want to do it on your business and maybe have another partner that they can look at because they are going to look at your personal credit. So if it's a personal tax lien, maybe. If it's a business tax lien on the business that you're using to do the flips, then that is a no, right? You're not going to be able to get that. If there's a lien on the property that you're about to purchase, then yes, but of course that is going to be taken care of by the guy who's selling it because it's his tax lien and not yours. All right, now I gave you a prelude in the beginning of this show that there's a surprise. If you have a pending tax lien and you're not happy about it, who would be? It's reporting to your personal, it looks like our PowerPoint crashed, that's fine. If it's reporting to personal and thus inhibiting you for applying for financing, then you have good news.
Good news.
I had some notes, now they're gone. But I think it was 2 years, I think it was 2015, there was some litigation that went through, and the bureaus have agreed to change some of the things that they report onto your credit, all right? So specifically, they agreed to completely stop showing non-loan related collection items like gym memberships, library fines, traffic tickets. That's gone, all right? But on the other side of it, and related to what we're talking about right now, the credit reporting agencies agreed to remove new or existing tax liens or judgments if they don't contain at least 3 out of the 4 pieces of identifying information that need to be there. So there's laws about what they can report. For them to be able to report it, it has to have a certain amount of information. Most of the time, these tax liens and collections don't have the necessary information. So the bureaus have agreed to remove everything. Now, right now, it is April 11th. This goes into effect on April 16th. So 5 days from now, if you have a personal tax lien that's been stopping you from getting financing, 5 days from now, it's a heyday. Go get every credit card you can get.
I don't know.
Rack up all the debt you want because everything's gone. It's forgiven. I'm just kidding. Remember,
let
you
me
still
just
owe
say,
your taxes, right?
Can I just say something? I've never
You can
looked
say
at
it.
a credit card or a credit report, and I look at some of them, and I say, oh, it looks like you've got a tax lien. I've never had someone say, oh, that's not mine. So that is great news,
Uh-huh.
but I just want to keep it real that it's usually pretty accurate.
You know what? I have an alternative to that. When I just got into this, when I got into this like 10 years ago, my father-in-law, I was talking to him, I was like, hey, maybe we can get some financing for you. And we ran his credit, and he had like 7 tax liens on there. And when I told him about it, he said, oh man, that's from a piece of real estate I owned 8 years ago. Those were all paid off. It was a temporary thing because of his business partner didn't pay the taxes, and then he had resolved it within 6 months, and they were still reporting. I think it's very common to have tax liens that have been resolved that are still reporting years later. So we were able to apply and get them removed immediately. They were all reporting falsely. So I have a personal example of...
But they were still his.
They were his, but they were all resolved, but they were still reporting as... I mean, how much money did he lose in interest rates, different things for having these stuff reporting? So definitely check your credit. There might be stuff on there that's not accurate. All right, so let's say this goes through. We actually went through, we'll do a super rapid fire on all the different funding programs. Once this goes through, what's the impact? First of all, CRE, no impact. It's super easy to get those anyway. It doesn't matter if you have one. If you want to get a personal term loan and now your tax liens are no longer reporting, great. That makes it a lot easier for us to apply for those because that will no longer be disclosed. Same thing with business credit cards or personal credit cards. That is no longer going to be a problem. If it's a business tax lien, though, it will be a problem, and it is not going to be helped by this legislation. This legislation only is, it's not legislation, it's litigation, actually. It only affects personal reporting. If you get a working capital loan, doesn't matter because they didn't really care that much anyway, and it's really business that they care about. Factoring, minimal impact because they care about the business taxes, and this is not impacted by that. BDRA, you still can't use the BDRA to pay for taxes even if they're not reporting because it's a prohibited use, so no impact there. Term loans. Little bit of an improvement, right? But remember, don't lie to the banks. That doesn't help. Equipment, some possible improvement for personal lines, but personal liens. And fix and flip, that might actually have a good impact on fix and flip because now they're not going to see those liens and be able to get the financing. All right, so that is it. That wraps it up for the day. Thank you everybody for coming on. Remember, subscribe to the show. Come back next week for fix and flip financing. How to get 100% financing on your fix and flips. And that's it. Rhoda, thanks for coming on the show.
Thank you.
Thank you. We look forward to doing a lot more deals together. Give me a cheers.